The phrase making millions from stocks sounds dramatic, but the reality is much quieter and far more achievable than most people think. It doesn't start with secret tips, risky bets, or watching the market every day. It starts with understanding how wealth is actually built in the stock market and what beginners should focus on from day one. The stock market is not a place where money is made quickly. It's a place where money grows slowly through ownership. When you invest in stocks, you are buying pieces of real businesses. These businesses sell products, provide services, earn profits, and grow over time. As they grow, the value of your ownership grows with them. That's the foundation. The first step for any beginner is not picking individual stocks. It's understanding diversification. Instead of trying to guess which company will win, beginners should focus on owning many strong businesses at once. This reduces risk and increases consistency. Broad stock funds do exactly that. They allow you to invest across entire markets instead of betting on one company. This approach removes the need to predict the future. You don't need to know which business will perform best next year. You only need to believe that productive companies as a group will grow over decades. The second step is starting early, even with small amounts. Millions are rarely built from one big investment. They are built from consistent investing over long periods of time. Small amounts invested regularly compound in ways most people underestimate. Compounding means your returns begin earning returns of their own. Over time, growth accelerates, not because you invested more skillfully, but because time multiplied your results. The third step is consistency, not timing. Beginners often wait for the perfect moment to invest. Markets go up and down, and fear causes hesitation. But the truth is, time in the market matters far more than timing the market. Investing regularly spreads out risk and removes emotional decision-making. You stop reacting to headlines and start following a system. The fourth step is patience. This is where most people fail. Stocks do not grow in a straight line. There will be drops, slow years, and periods where nothing exciting happens. These moments feel uncomfortable, but they are normal. The people who eventually build significant wealth are not the ones who avoid downturns. They are the ones who stay invested through them. The fifth step is reinvesting. When businesses you own generate profits, those profits can be reinvested to buy more ownership. This quietly accelerates growth without requiring additional effort from you. Reinvestment turns time into an ally. Now about the word millions. Reaching that level is not about extreme returns. It's about long-term discipline, increasing contributions as income grows, and allowing compounding to do its work over decades. Many people who reached that level didn't feel wealthy along the way. They felt patient. They felt boring. They followed simple principles consistently while others chased excitement. The stock market rewards ownership, consistency, and time. For beginners, the goal is not to get rich fast. The goal is to build a system that works quietly in the background while life moves forward. That's how small, regular investments can eventually grow into something life-changing. Not through luck, not through predictions, but through ownership, discipline, and time.